Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Medlive Technology Co. Limited annual report. Medlive Technology Co. Limited offers a wide range of businesses and services through its online professional physician platform. At the core of its operations are precision marketing and corporate solutions that include digital marketing, digital detailing, digital marketing consultation, and digital content creation. The company also provides application software development and other relevant services to support its clients' business needs. In addition to these services, Medlive's Medical Knowledge Solution offers medical education and clinical decision support through licensing software to physicians and other registered users. This includes healthcare professionals and pharmaceutical companies that can utilize the platform for their own purposes. The company's intelligent patient management solutions are another key area of focus. These include single disease management services, such as disease knowledge dissemination and treatment compliance monitoring, as well as patient education services like content development and application software development. Chronic disease management services are also provided for various conditions including Parkinson's lymphoma, stroke, diabetes, breast cancer, lung cancer, and ovarian cancer. Furthermore, Medlive is involved in research and development services, internet hospital services, publication and planning services for medicine guidelines and medical consensus, organizing medical exhibition conferences, providing medical services, and offering research services to pharmaceutical companies. These diverse offerings position Medlive as a comprehensive provider of healthcare solutions and services. Medlive Technology Co. Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Medlive Technology Co. Limited trades at a lower price-to-earnings ratio of 17 times and a lower price-to-book ratio of 1.15 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 5% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 3.37%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company are multifaceted and varied. One key factor is the adoption of precision marketing and corporate solutions, which has led to a significant increase of 16% in revenue. Additionally, medical knowledge solutions have contributed to a 6% rise in revenue, while intelligent patient management solutions have seen a modest 2.4% growth. The company's ability to expand its customer base is also a major driver of revenue growth, with an 18% year-on-year increase in customers and a 29.1% increase in covered products. The launch of new features such as AI search and proposal assistant has further boosted revenue, while the synergistic drive of content plus AI has also contributed to growth. Furthermore, the company's focus on improving clinical diagnosis and treatment experiences for physicians has led to increased adoption of medical knowledge solutions. The expansion of healthcare customer base, with 41 new customers added in a year, has also been a significant factor. Overall, these factors have combined to drive revenue growth, resulting in a substantial increase in paid clicks from 13.3 million to 15.7 million. In contrast, there are no primary drivers of revenue decline mentioned in the summary. The company's focus on innovation and customer satisfaction appears to be paying off, with revenue growth across various areas. The net income of the company experienced a significant increase, rising by approximately 17.8% from RMB 300 and 27.2 million to RMB 300 and 85.4 million between 2 consecutive years. This growth indicates a substantial improvement in the company's financial performance. Additionally, the net income also increased by 4.7% from RMB 300 and 30.3 million to RMB 300 and 47.9 million during this period. In terms of profit margins, the gross profit margin saw a notable increase, rising by 2.4 percentage points from 58.6% to 60%. This improvement suggests that the company has become more efficient in its operations and is able to maintain higher profit levels despite increased costs. However, the net profit margin experienced a decline of 4.9 percentage points, dropping from 59.1% in 2024 to 54.2% in 2025. Despite this decrease, the net profit margin remains at a high level, indicating that the company is still generating substantial profits. The company's financial performance indicates a concerning trend regarding its operating cash flow. According to the provided information, the company is experiencing negative operating cash flow. This means that it is generating more expenses than revenue, resulting in a net outflow of cash from operations. This issue is further confirmed by 2 separate references on pages 36 and 37, which explicitly state operating cash flow negative and operating cash flow status negative, respectively. These statements clearly indicate that the company's operating activities are not generating sufficient cash to meet its expenses, resulting in a negative operating cash flow. The presence of negative operating cash flow can have significant implications for a company's financial stability and long-term sustainability. It may be necessary for the company to reassess its operations, reduce costs, or explore alternative revenue streams to improve its cash flow situation. The company's financial situation has undergone a significant change in terms of its debt level and interest expenses. A notable increase in debt investments is evident, with non-current assets rising from RMB 440,374 to RMB 853,849 and current assets increasing from RMB 199,087 to RMB 953,179 between 2024 and 2025. This substantial rise in debt level has led to a corresponding change in the company's interest expenses. The interest income from debt investments for the year ended 31 December 2025 was approximately RMB 61.9 million, indicating that the increased debt has generated significant interest income. The performance of various segments and regions was notable in the recent period. In terms of geographical performance, the Chinese mainland stood out as a strong performer. The region saw a significant increase in revenue from RMB 547,622 in 2024 to RMB 628,939 in 2025. This growth demonstrates the region's potential for continued expansion. On the other hand, the overseas region struggled with a relatively small revenue of RMB 13,216 in 2025 compared to RMB 10,833 in 2024. This decline suggests that the region may require additional support or strategies to improve its performance. Management's outlook on the company's strategy is centered around leveraging its existing resources to drive growth. The company plans to build a patient management community through physician invitations and integrate AI medical large models to transition from digital services to intelligent services. This will be achieved by expanding into new areas through digital transformation, enhancing customer loyalty and placement efficiency, and forming an integrated solution that combines medical strategy, market strategy, and clinical research. To further drive growth, the company intends to pursue strategic investments and acquisitions that generate synergies with existing solutions offerings, expand its customer base, and enhance technological capabilities. Additionally, a significant portion of IPO proceeds will be allocated towards investment in technology, pursuit of strategic investments or acquisitions, and general corporate purposes. This indicates a focus on innovation, expansion, and consolidation to solidify the company's industry leadership position. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of businesses or assets that would impact its operations or financials. This lack of activity suggests a stable and focused approach to business management, with resources being allocated towards core objectives rather than external transactions. That concludes the financial summary for Medlive Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.